Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Neil Cameron and Susie Harris of Parkwalk Advisors to talk about the Parkwalk EIS funds. Hi Susie, hello Neil, welcome to the studio. So we're here to talk about the EIS funds. Susie, what are the EIS funds?
So what makes Parkwalk unique is that we invest solely into UK university spinouts. So these are businesses that have been created to commercialise the cutting edge technology being developed and incubated within our world-leading universities. We are actually the most active UK investor into university spinouts. We've invested into over 200 businesses now since inception.
And Neil, what's your role at Parkwalk?
So at Parkwalk, I'm an investment director. I've been involved in Parkwalk in various guises since 2009. So my role there really is assessing companies. So I sit on the investment committee, and then I sit on the board of about 8 companies, to managing those, hopefully to bring them to a successful fruition. I was a global consulting partner at Arthur Andersen, and then after that I embarked on a number of entrepreneurial ventures, including investing in Cafe Nero. So I was a founder investor in Cafe Nero, and still I'm a shareholder there. And
you have 2 EIS funds? And you have a number of individual university funds. Yeah. So I guess focusing on, we call them the 2 main or 2 flagship funds, Opportunities and KI Fund. Subtle differences between the 2. How many companies are you looking to back in each?
So essentially exact same investment strategy across both funds, but the knowledge intensive funds are annual HMRC approved funds. So there are some slight differences in terms of the tax treatment. All of your initial income tax relief is tied to the date that the fund closes, which is generally right before tax year end. And you receive just 1 EIS 5 certificate instead of multiple underlying EIS 3s. In terms of portfolio size, Opportunities EIS is 8 equal underlying allocations, and the knowledge intensive fund tends to be 10 to 15 companies, slightly varying weightings, but nothing will account for less than 5% or more than 20% of the portfolio.
And so turning to some of the companies that you back, do you have, well, firstly, what sort of companies are you looking for? Are there certain technologies that UK universities are good at producing? Are there any particular themes that you look to back?
We're actually entirely sector agnostic. So if it's a technology business spinning out of a university, we'll take a look at it. The UK has a few areas of technical expertise. So as you'd expect, things like quantum computing, digital health and medtech, advanced materials, AI, big data. But essentially we are interested in sort of the spin out environment in and of itself. So in terms of why you might want to look at investing in that space, the UK is pretty unique in that we've got 4 out of the top 10 and 2 out of the top 3 universities rated globally in terms of research and development. We massively punch above our weight when it comes to deep tech R&D in particular. And the technology transfer process itself is really interesting in that you are investing into ideas developed by some of the best minds in the world, incubated over years, sometimes decades within some of the best universities in the world, obviously supported by the university, receiving multiple rounds of grant funding. And that spin-out process by which the technology then becomes an independent business is quite interesting in that the technology transfer office at the university gets involved. It makes sure that the technology has been peer reviewed. It makes sure that the company has freedom to operate. There is protection in place for the intellectual property in the form of patents, frequently whole patent families, and there is a commercial team built around the founder. So at the point where we're investing, these businesses have already been through this fairly robust process, plus, of course, the due diligence that our team carry out as well.
That's very interesting. And so turning to the companies themselves then, do you have any recent examples of companies you backed within these funds?
Yeah, so we've got some really interesting companies at the moment, and one of which is a quantum computing company. So quantum computing, if you look on the public markets in the US,
terrifying.
They are exploding in terms of valuations. So you've got things in the tens of billions of pounds now. And we invested in these companies when they were spun out of Oxford originally and UCL. So we got in a very early stage. And one of the particular ones is Quantum Motion, which is based on silicon technology. So what that means is you can get millions of qubits on a chip. So to put that in context, you could put a quantum computer within a rack within a data center, and the equivalent for, say, Google or IBM's technology would take the size of a football stadium. So we think this makes it very different in terms of the cost of obviously the computer, and therefore the expandable market is huge for their technology.
So how do you find a company like that, and which university was responsible?
So Quantum Motion came out of Oxford and UCL. And again, UK was a leader in quantum if you looked at the academic research in terms of the universities. So we were very lucky in terms of being able to spot that through our university connections, because we run funds for Oxford and Cambridge in terms of feeder funds. So we have like 10 Cambridge funds and 8 Oxford funds. And so we see the technology pretty early, and then we can use our opportunities fund to pick the best of those to invest in with a larger amount of money in an evergreen fund.
Oh, very good. And when did you back that company?
We backed that company in 2019 was the date we backed Quantum Motion, which was 6 years ago now. Yeah. So it's been a long journey, but we think it's going to be a good return for our investors.
Interesting. Any other examples?
So a different example would be in the medtech space. So we backed a company out of Imperial called Entia. And Entia has a blood monitoring device or a blood analyzer, which you can use at home. So most of the home testing kits at the moment, you would take a blood sample and send it in the post. But this is a machine that works actually in your home and can give you a response within 15 seconds. And where this is used is for cancer patients. So if you're on a chemotherapy course, typically you will go into hospital, get a blood test to see whether you or your immune system can handle the chemotherapy. And if it can't, then it's a wasted journey. And obviously that can be quite stressful if you're going through cancer treatment. So now what you can do is test at home. That result gets sent to your practitioner. He can tell you whether to come in or not to the hospital, and whether you can have the chemo or not, or whether you have to stay at home and maybe take some other drugs to get your immune system up. So really impactful for patients. And we've got some great videos on our website actually, which sort of talk about testimonials of people who are using this technology. So really impactful for cancer patients and the NHS in general.
And the point at which you're investing in a business like that, have they proven the technology? Have they got some form of commercial traction?
Yeah, so in that example, that's already got approval in the UK. So it's already approved in the UK. And we're now trying to get FDA approval to move to the US. So that has just gone through. I mean, trying to get things into the NHS is quite a long process, but it's now in 2 of the major cancer centres in the UK and is being rolled out to other cancer centres. But now we're actually expanding to the US and getting FDA approval next year.
Any other examples?
I guess the third example is probably one in a different technology, which is 3D printing. So 3D printing has been around for a while. I mean, I first encountered it about 10 years ago, but it's come on leaps and bounds such that now we've got a company called Wayland, and this produces large machines, which are sort of £1 million each roughly, but they can print high quality engineering parts, which are quite complex. And they use something called e-beam technology, which has totally transformed the quality of the materials that you can produce and the efficiency with which you can produce them. So now what is happening is you can produce high quality parts, and the cost of it is becoming commensurate with batch processing or typical manufacturing processes, because you no longer have the long lead times, you don't have to have minimal order quantities, you don't have to have the warehousing, you can produce the parts to order at a reasonable price now. So it's great.
That does sound good. And so I guess lots of these companies, those funding rounds are quite competitive. A company spins out of Oxford, there's plenty of investors for those companies. How does Parkwalk find and win some of these deals?
Well, I think, because we're the biggest EIS fund in the market, most deals come to us, to tell the truth, because people know that we invest about 50 million a year. Average of the last 6 years, we've invested about that amount. So they know that we are sort of a good avenue for funding. So we've seen most things. And then I think we concentrate a lot on making ourselves founder friendly. So we don't tend to put in preference stacks in the cap tables. We try to make sure the founders are rewarded for the work they put in and the invention they brought to the party. And we also spend quite a lot of time with co-investors. So making sure we've got a good syndicate, because these companies, as you say, they do take a long time to bring to market. And you've got to make sure that your founders, your management and your investors are all aligned such that you can sort of take them on the journey to fruition.
You need some deep pockets.
You do need deep pockets, and I guess we're quite lucky because we are the largest fund, but you can't do it all yourself. So a number of people have come into the market and tried to do it themselves, and they've learned pretty quickly that that's not possible. So syndication in this market is key.
But I guess the recent rule changes on the EIS limits might expand your investable universe quite considerably. Yeah. Some of those winners you can back for a little bit longer now.
That's certainly true. I mean, there was this sort of valley of death that people used to call it between sort of when EIS funding finished and other people would come in, which was pretty much determined by either having to be revenue positive or cash flow positive or profitable. And there was people who just couldn't fill that gap. And so by pushing the limit up there, hopefully let's close that valley, but we still need people to come in who have got sort of deeper sources of capital to really help support these businesses in the future. And I think, to be fair, I was sitting on a panel the other day with the British Business Bank and the government representatives, and it seems like you can now see a whole hierarchy within the British Business Bank of different funds for different stages, which are now being very well funded. So we're hoping that will help close the gap from the other end as well.
That's good news. And so I guess the ultimate goal is to generate some exits. Any exits you can talk about?
Yeah, well, as I say, good companies are bought, not sold, I think is the phrase in venture capital. So exits are at a premium, and we always take advantage of them if they come along. And in the last year, we've had a couple, which probably worth mention, because we've returned over sort of 200 million to our investors over the course of the fund, and we've had over 70 exits. But the two from last year, one was a secondary sale. So that is where the company, we sell our shares to another investor within the company. And that normally happens in a funding round where potentially a new investor comes in. And so this was a quantum computing algorithm company called Phasecraft. And they're doing quantum algorithms which would run on quantum computers developed by IBM, Google, Quantinuum, other people. And so very successful company out of Bristol and UCL. They got backing from Silicon Valley VCs, from European VCs, and from European CVCs, which show very good cap table. And when those guys came in, they wanted to get a certain stake, so we could sell some of our early investors' stake to those people, and we gave them a 14 times extra return. So very nice for us. And we still keep some people on the cap table, the later investors, and they're benefiting from the fact that you've got such a strong investor base now on that company, which hopefully you can take it into the billions we talked about earlier with the quantum companies.
And Neil, you mentioned one other exit there. What was that one?
Okay, that was Cytora, which is in the insurance area. So this was a company that was using large language models, we've heard quite a lot about, to make the insurance process much more efficient. Insurance process typically was generated in Lloyd's many years ago, and they haven't changed very much over the years. And so this company could make the whole underwriting process much more efficient. We had a very good cap table with insurance companies on the cap table, as well as insurance companies being customers. And we were going through a funding round, and they decided they wanted to acquire the company. So we sold that company for 13x just recently.
So I guess we can't talk about those 13x times returns without also mentioning risks. Deep tech investors, longer time horizons, typically. What would you say are the key risks within your EIS funds? And then I guess the key risks of your funds versus maybe some of the others.
So obviously, like any EIS investments, these are early stage, high risk businesses. Obviously, you've got the EIS reliefs that somewhat mitigate those risks for you. In addition to that, Parkwalk will always diversify an investor across both technology sector and also investment stage. So depending on which of our funds you invest in, the early stage university funds, which we run with Oxford, Cambridge, Bristol, Imperial and the Northern Arc universities, they tend to be kind of seed pre-series A sort of level. And then the later stage funds, you'll have a range from say Series A through to Series C. And so we're looking to mitigate the risk in those ways. And also, as we mentioned, the technology transfer process itself means that there's a very robust DD process throughout the company's existence. So within the university and the technology transfer process itself, and then moving into the Parkwalk due diligence process. And it's probably worth mentioning how many proposals we see every single year. So we're very fortunate in that we don't have to go out hunting for deal flow. It comes to us. We'll see maybe 1,000 proposals in any given year. A lot of those maybe don't really fall into our investment remit, but of those we will probably meet with around about 200. About 30 to 40 of those will then go into a really detailed due diligence process with the team. So they look at the commercials, they look at the potential opportunity of the market that the company's breaking into, they look at the team, and from those we'll probably tend to invest in maybe 10 to 20 new companies across all of the funds in any given year. So there is a significant amount of due diligence going on.
Yes. And so summing up everything we've discussed, for those who are looking to back an EIS fund this year, why should they be backing Parkwalk?
So for me, it's three core things. So firstly, our experience as an EIS manager. We've been around now for over 15 years. We've always operated in this space. We are the largest EIS growth fund manager. We've delivered more in terms of exits than any other fund in the market. Secondly, that access to unique deal flow. So you're looking at really cutting edge businesses, looking to solve key global issues and coming out of the UK's world-leading universities with that really robust tech transfer process behind them. And finally, it's that track record. We've now invested in over 200 companies across 15 years and delivered back over 200 million in exits to our investors.
Well, Susie, Neil from Parkwalk Advisors, thank you very much.
Thank you.
If you're watching on YouTube, please press like and subscribe to the channel for more.